Next on our list is a South African listed entity, well, on a GDR type basis, I'll explain in a minute, and that is Richemont. So it's a Swiss-based luxury goods company controlled by the Rupert family. Johann Rupert is the executive chairman. It is core, or at its core, basically watches and jewelry. So the watches are, of course, the brands that you'll be familiar with, like Cartier and others, IWC, etc., etc. And then it is jewelry. So that is Cartier again, which is probably one of the world's largest jewelry brands, and you can get all sorts of necklaces, rings, and other things from them if you're brave enough to go into one of the stores. And then, of course, it is the other brand, Van Cleef & Arpels, which is more complex jewelry, but again, necklaces and so on that cost hundreds and hundreds of thousands of dollars.
Yeah.
So they don't have to sell too many of those to make the kind of profits that they do. Market capitalization in rands, because it is listed here, is 516.9 billion rands. Price earnings ratio 20.65, dividend yield 2.96. Recent results, though, weak on two fronts. Watches not looking all that good, and I guess that's the impact of the smartwatch trend.
Yes.
And or just generally softer sales in China, Hong Kong, and then also the jewelry gifting business also under a little bit of pressure.
Yeah, there's regulatory constraints to that's having an effect on demand. Yeah, I mean, I think the market was unpleasantly surprised by the downturn in the April sales, 18% lower than that time last year. So
that's not even in the results. That's what they normally at the end of the results commentary. They said this April compared to last April. Not
correct, which is a huge shock. And there might be a few once-off factors there, but 18% is significant. Johann Rupert came out and said he doesn't expect the trading environment to improve anytime in the near
that's
future.
what he always says, to be fair.
True.
He's known as sort of Rupert the Bear because he likes to sort of under-promise and
over-deliver.
Yeah.
The problem is that some of that under-delivery is coming true too. Look, it's a well-run company, huge amounts of cash.
23% very strongly cash generative. Yeah.
I mean, they've got as much cash as they've got liabilities on the balance sheet. So, there's no funding problems there. Currency translations for Richemont and for a lot of these groups are a big problem. The Swiss franc is translating into lower profitability for some of them. But again, a good portfolio of assets, well run, just going through a soft spot at the moment, and the price is reflecting it.
Yes. Well, you refer to the price, so let's have a look at that on the chart in a minute. But one other thing I want to point to is that Richemont has got this mix of its own stores in some areas, and then it's also got relationships with big retail distribution outlets, and they've kind of tinkered with that. I think recently they've moved more towards their own distribution functions, which makes sense.
Yep.
But in this week cycle, they actually indicated that in some instances they'd bought stock back from some of their big partners and taken some of the watches back to Switzerland and actually disassembled some of them.
Yeah. So they're having to manage their supply across their network. Sure.
What about the smartwatches? For you, is it a concern? Because the kind of person that needs to get discovery points now is going to go and buy a damn Apple Watch that can track their heart rate. Is that the same person that would be buying a very expensive Panerai or an IWC, do you think?
I think the function's completely different. I think, if you're going to have a Mont Blanc on your wrist, you might have your smartwatch and clock your steps. I don't think it'll cannibalize too.
If anything, it's making
effect.
the category a little larger because people are finding new reasons for wearing watches that perhaps they weren't before.
Yeah, there was that argument that watches were kind of losing their prominence with, you could get your time off your cell phone, but we're not seeing that. So, yeah.
And for what it's worth, they have indicated in the results commentary that they're going to emphasize and grow the jewelry business, and they're going to some extent, tweak the watch brand portfolio and perhaps look a little bit more carefully at the stock that they keep and so on and so forth. So here's the question. This slide here, and it is a slide back to the sort of high 80 rands a share. And look at that. It hasn't done anything for investors for 3 or 4 years. Is this a good buying opportunity? Is this a time to get out? Is this a time to hold if you've got them? What would you say?
Look, it's not a cheap stock. It never is. It has given investors arguably a discount on the highs beginning of this year or end of last year. It's about 25% off them. So I would argue a good entry into a very well-run, unique company.
Yeah. Okay. So you're hot on that.
Hot on it. Yeah.
Okay. Good. Me too. We do own them.